Good afternoon. Welcome to OptionsTender. It's Friday, October 3rd, 2025. So we're taking a look at SPX. We're going to show the average true range, the ATR indicator quickly. We'll go through all of our indicators and down to the 65 and look at some of the other indices, perhaps on the daily and the 65 as well, if we have time. And so today, we're actually getting pretty good breadth. Which is a switch of what's been happening, and that's because of DIA and IWM, and also MDY, the mid caps as well, are showing some strength here, while big tech has taken a breather, showing some slight weakness. So the biggest thing that we're going to be concerned about is the VIX. Once again, the VIX is in a really, really tight range, and that's why I'm bringing up the ATR, and we'll show what's happening with that. All right, so we're doing this intraday about 1:15 Eastern Standard Time, PM. If you're interested in getting these videos intraday, please consider becoming a YouTube supporter. Really helps out the channel, and also I thank you so much for that. So we have SPX on the daily time frame. Let's close this up here. Let's throw on real quick something a little bit different. Go to that little beaker. The ATR, average true range. Throw that on there. And really all I want to show here is that we're at a level of contraction, and we'll be looking for expansion. You can look up what ATR is. It's the average true range of the bars, in this case for the last 14 days. You can see that when the bars are huge, that you have this spike. In other words, volatility is up. Whether price action's going up or down, it reflects on the volatility of the range of those bars. So we're at a level to where we have contraction, and things could start to lift, whether it's to the upside or downside. It doesn't matter, but obviously I'm biased to the downside. But that's going to start expanding here pretty soon. Okay, so as usual, we look at the naked chart. Are we going to get a reversal bar here? That's what we'll keep checking on. We had a potential hangman here, and we're at resistance once again, forming a wedge here. Doesn't mean we can't break out from it, but obviously the probabilities of a wedge breaking down are greater when that forms. So we'll take a look at that in the 65-minute. So here's our trend indicator. We're well into the green, bounced off that 20 exponential moving average. We are getting on our smart MACD, we have that divergence that continues to form here. We'll continue to monitor that throughout the daily analysis that we do. We're not going to look at the weekly time frame, but we'll be looking for a reversal bar there, as usual. So we have our moving averages. The 8 exponential moving average is our momentum indicator, and the 20 is our trend. So those are still up. We'll throw on our traditional look here. And here's a wedge that we've been watching. We also placed this other one from the high here, just for reference. We're rejecting off of it, so far so good. Really at the time there was only 2 points. So is this legit? We'll see. And we're getting in this really, really tight range here of a wedge. So we'll see if we break out or break down from this point. Now, our news catalyst that we were talking about yesterday is still in play. We potentially have the Senate vote here. I think about 1:30 is what was said. They're already convening right now. I checked out on YouTube the live look at it, and they're just debating things. So they're not taking a vote yet. We'll see, and then maybe around 1:30 or so. So towards the end of the market hours, we'll look for that vote. Maybe there's a reaction off of that, but I think the big deal would be if there's federal cuts from the presidency, and he sent a pretty weird video out about the Grim Reaper and coming for those jobs. So that seems to be what's on the table here. So we'll see if we get a reaction off of that. I think that would actually be the catalyst itself. So we'll see. All right. Anything else? No more fundamental stuff here today. Let's put on some indicators. We have our McClellan oscillator, which is driving to the upside here. Now we're about neutral with the divergence if that rolls over. And the reason for that, again, is the breadth is strengthening. You have most of the individual names, majority of the names in the NYSE and are small caps and mid caps and things like that. So the big tech stocks are obviously not driving this move right now. All right, we have our MACD. Same story, little divergence here, but no red histogram, and they're not expanding, right? Negative divergence here, 3 peak. And looks like we're getting ready to get a slow stoke crossover here, and then you'll get your sell signal when it crosses over the 80. So no setup yet. DMARC, 5 count so far. Let's go over to SPY. Change it to the divergences, and we'll check out the money flow index. Again, that's a divergence there. You have distribution. While price goes up, the volume and RSI. RSI plus volume, that's basically what this is to show distribution, is falling. All right, so like yesterday we talked about maybe we can reach up here to get that Bollinger Band. Well, we did. So this is a sell signal in itself. If this is your kind of setup, you have the Bollinger Band. We did take some shorts off of this, by the way. Not because of this, but because of the wedge, the traditional look. But this, satisfies that as well. We hit that top Bollinger Band with overbought situation and divergence. So that's a good sell signal. The Elliott oscillator, again, not sorry, I got a little text there for volleyball. So not confirming this move here. They're looking for a setter tonight. And I am not a setter in volleyball, by the way. Let's go over to the VIX. Okay, again, this is really, really the most important chart. And I know that on X, a lot of you look at that for information. And I'm sure it's going around that this was the 4th day. Yesterday was the 4th day or so where the VIX was positive and the market was positive, which is has only happened maybe 4 times before, something like that. But either way, it's bizarre, this price action, because the options expected moves, which you'll see later in the 65, the options expected move was hit on the upper edge from the VIX and SPX, and I'm not sure I've ever seen that before. So I've seen one day, where they'll both be up, and usually that signals a imminent reversal, and that's happened, but not 4 days and not hitting the upper edge of the options expected move. A wacky price action. So we had our minor low here in a cycle. We did get that yesterday. It was the ideal low for this minor cycle, and we'll see if we start moving up in this minor phase and break out from, you see this tight price action, or are we in this declining phase here to where we get a breakdown of this move and the market continues to rocket to the upside? That's going to be super, super important. So that's what we're watching. And we're really just squeezing between this 100 moving average. You can see this was the 50 that rejected there, but you can argue that it was actually the 100. You have that wick there and couldn't stay above it for that wick. The 100 reaction there, all the way down. Again, and again, all of these. So the 100 is really where it's at. But you can see that this wedge here, we had a good question in the Discord, like where do you see price going to? And you know, in the near term, obviously we're going to look at this 19 with this wedge breakout. Maybe we get to the 19 and back test. That would be typical price action when you have a triangle like this, is to back test that triangle. So maybe we get a spike out here and a back test, or this is getting so tight, we just continue to move higher. And I do think this is going to be a move ultimately throughout the months going into January. We should see at least, I mean, you have a little downtrend that you can draw here, at least 55, 60 spike through, or, I mean, really higher. Okay. I know that doesn't seem possible at this time, but that's what I'm looking for. Okay, so let's just go around the horn and see if we can see anything. Bring up the daily. Getting real tight price action here. Again, we have divergences all across the board. You can see that right here. Price action is going higher while the strength is going lower. Looking for that crossover here. And I can go through all of those with you. Same thing. We're getting red bars so far. Do we pause here and end this on a Friday like this, or do we get follow through at the end of the day? We'll see. SMH. Okay, this is interesting. So I was using this line here. Now you could certainly adjust this to where, you know, it touches the bottom here, or maybe that top, and gets to that point. You know, that's such a far move that I would just consider a range. But I like it here. I like it at this point where you're barely touching the bottom there. And so I drew this other line, which we were looking at anyway as a triangle type consolidation, possible to go higher. Or if this was just a equilibrium and to break down, you can also draw it as a bear flag as well. And it ended up breaking down, but you see how important these touches were here, all along this line, and rejecting off of it as well. So that puts this in a good spot here for a reversal at this point. And so far, it's respecting that line. So we'll see how that goes. We close this gap and continue, or if we start to make new highs. I don't think that's the case, but that's what we'll look for. Okay, IWM is a big winner today. We'll see where this ends off, because let me get us a resistance here, the former all-time highs, and that does go back to other resistances. There's a huge range here, so I want to pay attention to that to see if price action breaks back underneath going into next week or so. But here's a wedge forming. I didn't want to move it down yet. I want to see what price action happens. Oh, it looks like there's a good channel there. So that actually makes a lot of sense. You can make that into a channel, but I want to see how it reacts to this wedge. And, you know, back testing the wedge, will we get a big wick here and close underneath the wedge? That could be a sign of a reversal in itself. And we also did get divergences there as well. You can see it in a lot of the price action there. I can show all of these things, but I don't want to waste your time. There's divergences. Okay, again, here's a wedge forming, and we're going to see how this plays out. We'll see if the Dow DIA ends up rejecting off of us like this bar here, or if it closes strong above it as a breakout, fake break above this wedge. So again, we'll just leave it right here for reference at this point. Now, obviously, you can take this and you can go like that, right? But again, I want to leave the originals on, see how they work out. There's another, I guess we'll show this. I think I showed it in a public video already. We'll see. You see this nice basing, and we got the cycle lows here. But look at the weekly time frame. for the VIX. Thought this was interesting as well. It's kind of lining up with everything else. I give the full analysis for the $4.99 members a month. I give the full analysis with SPX and timing with the VIX. So if you're interested in that, please consider becoming a member there. And you get a lot of good education. So we have this trend line from the past lows, and this matches with the monthly cycle as well, where we're in a rising phase. So we're getting these higher lows here. That's not a real wick, I don't believe. But you see in this this weekly cycle low here, we're getting this nice basing. When this breaks out, we're in this rising phase here. So the weekly time frame, we have plenty of time going into the end of the year here for timing for a rising phase. So just thought that was interesting and want to show you. So let's go to SPY. Let's go to the 65. You know what? We should check out our keep it simple look here on analog. See how that's doing. So we'll take off the log scaling, our analog look. Here was our keep it simple. All right, look at that. Right at the apex. You know, I can extend these out just a little bit further. Now right at the apex, we're rejecting off of it with a nice tail candle so far. We'll see if we get continuation from that. But, you know, just really tight price action. No matter if you move it or not, even if you move it here, you're really looking at a tight wedge that's forming. And so that's going to expand, break out, or break down anytime now. Obviously, the probability of a move like this getting overextended with the market up, I don't know, 40% or so from the lows, we're probably going to get some rejection off of there. And I do think we're going to make new lows, but our first test here would be this wedge right here to test the lows of the wedge. Okay, so let's go back to our regular programming. All right, put back on log. And we'll go to the traditional look here. So getting a little bit of rejection off of the top of the wedge that's forming, another wedge higher, right? Getting rejection right off of it. Looked like we're going to go up forever. And we're coming to this little gap. We have a gap form from today, from this morning. And if we close that gap, obviously we're breaking down the wedge. So you can tighten that up. You can leave it right on these touches right here. So let's see what happens there. Is this a reversal? Probably. Now, even if we had a devastating move here today, we already hit the upper edge of the options expected move for the week. Here's where the week closed last week on Friday. And so our theoretical trade is if we took a day trade here or something like that, the most we'll probably see is back to this center line here and give us a reversal bar on the weekly time frame. But it's highly unusual if you see one end of the options expected move and tag the other end. Now, when you had that ATR spike really, really high and you had volatility screaming at the bottom of April lows, it hit. That options expected move hit on both sides of it. But we're not in that environment right now. So I don't expect a huge move, maybe a big move, but not a huge move into today itself. All right, let's look at our trend. Our trend is up. You see the 20 exponential moving average still headed up. It's kind of lining up with that wedge now. And what we'll pay attention to on this, with this indicator, our trend and our divergences. And I showed you yesterday how the other divergences, this really, really cleans up the MACD and it keeps it into a range. This is a range type MACD. It's called the Smart MACD. And this is giving us that beautiful divergence here. A real clean look. And so far, it has worked really well. This is just another example when you get this high and then you make a higher high, and you get the lower high here, and it played out nicely. Here's your moving averages. We're touching the 8 EMA so far and getting a little reaction off of it. So the trend is still up, momentum still up technically. MACD starting to curl, no sell signal there, and you get this nice divergence here on RSI, making these new highs here, which this is a divergent line, which now it's legit because you have the 3 reactions off of it. So this is a good trend line now, and that also plays nicely with the divergent line here. So you have lower RSI, higher prices that will play out. And so we're just now getting a sell signal on here. We're at 76 on the slow stoke, so that's an early sell signal on the 65. So we could have our reversal in. DMARC, how does that play out? We had 2 9 counts, and we're playing with a 7 count so far. So not a real setup on there, but we had that 9 exhaustion. We'll see what happens here. Money flow, we did get to the overbought situation here. So if you do make another high, we'll probably get a divergence there, but this is a good sell signal in itself, with this wedge and other sell signals activating. Bollinger Band, same thing. You had that sell signal up here, reached a little bit higher, and then you got the sell off of it with overbought conditions. Elliott Oscillator, so just kind of a double top there with these 2 moves. And if I do suppose if we make a new high here, we'll be looking to see if we have any divergence in that. All right, so we want to show the VIX. Show it on the 130, and you can see this tightening price action here, really tight. So we'll see if it breaks out or breaks down. Really, to me, with those rising phases and such, we're looking really good with higher lows, and really this is winding up really tight. So I can imagine when it does break up or break down, and I think it's going to break up, it's really going to move. And look at this, we tagged the upper edge of the options expected move for the week. That's crazy. SPX did, and the VIX did. Like I said, in all these years, I don't think I've ever seen that before. All right, let's look at the Qs. All right, so looking at the Qs, they have that tightening wedge here. If we take out the wicks, you can, it almost touches there. But we do have this channel that was trying to guide here. We broke down from that, back tested, couldn't hold, back tested, couldn't hold, and we're rejecting off of that right now. So that could act as a good reference right there. I don't believe I got the count here. Let me show you the Elliott wave count. So far, we're fighting with this 127.2. That's from this correction here. That's the extension. That's your first typical. So if price holds there, then above that would be your 162 would be your next primary target there at 175. All right, and looking for a wave 5 somewhere around here. And I do think this is an ABC for a 5. And with that said, the A looks like a 3-way move for an A, B. And the reason why this is corrective, looks corrective, is because we have an ending diagonal price action happening. So I do think this here is a 1, 2, 3, 4, and possible wave 5 to complete that. And so we could be done with this move. All right, and then we'll get these numbers in play. We thought we might have had a 1 here, and that was not the case. So we'll look for our first move initially down. Have to form market structure to the downside to be confident and add on to our moves for any bounce. Sell the, not buy the dip. That's what we've been doing. Sell the rip. And I think that should be it, you guys. Maybe Tesla's a big deal today, so let's look at that. That's just getting crushed. Here's our wave count in Tesla. So it couldn't even hold that bottom edge here, breaking down. It could be done for its wave one, so we'll see if that helps the market stay still for a little bit. But huge move to the downside and getting into a good spot there for potential support, and the 11% move between today and yesterday from those sales, the deliveries. Nvidia have anything? I kept this line on here. I just thought it was a really interesting line. You know, it's price is trading around it, but it's rejecting off of it right now too. So very interesting to me. Okay, so we have this wedge that was playing out. This was a potential ending diagonal or leading diagonal. Obviously, if the market's going to go much, much higher and this becomes a leading diagonal, we'll look for a wave 3 to the upside. But again, with all the divergences on the higher time frames going from top to top, this to me is a fake break, this throw over, and now that's negative, and it should continue to move lower. Again, we're at the upper edge of the options expected move. So this, your safe trade, if you were to short this, your safe trade would be back to the edge of the options expected move for the week. But price action could go back in the range, but it's just highly, highly unlikely that we'd make both ends of the options expected move. So here's some gaps underneath here. All right, you guys, that's it for today. I hope this information helps. Please like and subscribe, and we'll see you in the Discord.